Let me show you how to use the opening range of the S&P, or really any market that you trade, from the New York Open with our zone indicator. So we have our two deep zones. This is where they like to drop the market or reverse the market or bring reversals into these liquidity grab zones. So they like to take retail out. They like to take the stops out. These are stop hunting techniques that they like to do, and they like to bring it into our zones and then reverse. So let's look at yesterday's opening range. Opening range, let's look at the New York Open. Started at 9:30. So 9:30 started the opening range here. This is the high of 9:30. And then let's go to 10 o'clock. So 10 o'clock here was the low. So these are these two lines that are represented with the opening range. So that is your opening range from 9:30. Just take a line at the higher price action, the lower price action. So that was the high. And that was the low to 10 o'clock. The first 30 minutes is your opening range. So that is your opening range. So how can we use opening range of the market the first 30 minutes to find out if the market is bullish or bearish? Well, any violation of the opening range, you should see a rally or a sell-off, meaning that's a big bias. So anything above the blue from the high of the opening range, very bullish. Anything below, very bearish, okay, from the opening range here. Okay, so how can we use our zones then for confluence on the opening range? Our zones, our two major zones, are the 100 and 200 deep liquidity grab zones. These are static and they don't move, they don't repaint, but you do get them during the day, and they do show different levels sometimes during the day. So right now we already know that yesterday's liquidity grab zones are the same levels we're going to play off today so far. They haven't moved, right? So they haven't changed. So we're going to trade off the same ones. So let's look at the trades yesterday. We had 4 of them yesterday, almost 5 there. So when you get, what happened is that we broke our zone around 9 o'clock in the morning. And we know if we break the zone, we look for a break retest trade, because it's got to stay in the zone and reverse. So we look for a break. We look for the retest. It has to get inside the zone. It can't close outside the zone by one candle. It's got to stay inside the zone. Our zones are very accurate. And then we get a pull-in bar, and we got to trade right away. This trade, now this is a 35-tick reversal candle. So this is a 1135. You can go lower. You can go to 1120, 1125, 1130 to get in earlier. But this zone started, the reversal was from 90 to 93. So it had a 3-point reversal zone. So that's how accurate these zones are. That's where they're grabbing liquidity. So they take the retail out and they reverse it and they bring it down. So that one was 83.5 all the way down to 70. That's a 13-point potential play on the S&P right away. That was at my time of day trade at 9:40. I talk about it all the time. 9:40, 10 minutes after New York Open. That's when they like to reverse these markets. It's a beautiful trade, 13 points to the downside. Then we come back up. We come back up into my zone again at 9:50. 9:50 is another time of day trade. 9:50 to 10:10 is a great time of day trade to look for reversals. And then we see another reversal inside the zone. This one's a little shorter, 82 down to 77. Still a 5-point S&P point play potential, or 20 ticks. Then it breaks out of the opening range. Now, what I want you to look at, it broke out of the opening range, and I commented at 10:51 in the chat room. I said opening range right at the 100 zone. This is our 100 zone. This is our 200 zone. So I commented at 10:51. So 10:51 all the way up here at this level. I said 10:51 is right at the opening range, because now we're above the opening range, so now we're bullish. We're looking for a pullback to the zone and then looking for a buy. Now some traders took this buy right here. Other traders waited for it to get into the actual zone, because this is really close. This got into the zone at 11:46, 11:56, almost an hour later. Give you plenty of time. Remember, this is a 35 tick reversal. You can get in earlier from the zone. But just from a 35 tick reversal is 98 3/4 all the way up to 11. Another 12 S&P point potential play. This is just a 13-point play. These are not 1 to 2 point play, guys. 13-point potential there. 12-point potential there. Then we come down the zone again, and we get another reversal in the zone. This one broke it by a little bit, so you don't take that. So you had 1, 2, 3, 4 zone trades with the opening range. So what we'll do today, we'll do the same thing. We'll wait till the market opens up, find a high and low between 9:30 and 10, and then you just mark these on your charts and see if our 3 top zones are going to hit. And this is your 20. This is my 100 and 200 zones. They are beautiful to play off of. You can see here on the day before. Look how these caught these zones. These zones were really, really active during the Fed. After the Fed, cut the long, cut the big short, cut the break retest short. This is a real big trade. 45 down to 11, over a 30 S&P point run. Break retest trade, another big one. Break retest trade, another big one. So you can use the opening range to help you out to decide. And if you look at yesterday, let's look at the opening range. So there was the high. There was the low the first 30 minutes. So that was the opening range right there. Now look at the confluence that happens with our liquidity grab zones. So using the opening range with liquidity grab zones works really, really well to give you confluence. So take a look at this break retest short, this huge break retest short, right into the zone. I was talking about this in the trade. I put a big arrow in the market when it's doing it in the room. Look at that. That's the best trade of the day right there. Look at that. A retest, a break retest of the low of opening range from 9:30 to 10 into my sell zone. And my sell zone was confluence. The market dropped 30 S&P points. This one up here, right up to the opening range. Right? So these work really, really well in conjunction with each other. Over here, we got back inside of the opening range. Retested, nice long, 60 all the way up to 75, 15 S&P points. So here's another. Retested exactly almost to the tick on the opening range inside my zone at 1519. 62 to 75, 13 S&P points. My point is, put the opening range from 9:30 to 10 on your 100 and 200 zones. It gives you confluence. And these are not small trades. We're not scalping in the room for 1 to 2 points. I mean, these are 13, 15, 20 point S&P point potential trades on your hands. So today, we know what to look for. So 9:30 to 10, I'll put them on the screen for you. And you do it on your own screen. We'll mark up the opening range and see if our zones can hit again today. And you can do this for the 100 and 200 zones. They're very leading. I give you an hour heads up on this one in the room. They're very leading. Now we can see where the zones are today right there in the upper left-hand corner. And you can do it on this chart also if you want to. Right now we're breaking higher with market profile. Looks like the market's going to start off in a positive direction. We're 67.04. We're in an imbalanced market right now.